In a working paper available to anyone interested on the National Bureau of Economic Research website, Moraine Bolhuis, Judd Kramer, and Larry Summers outlined important methodological changes in the consumer price index over time. But you didn't ask us about CPI. You asked us about Tesla, Apple, Wynn, and Meta. So we'll cover those today on Open Interest. Hello, everybody, and welcome. I'm Mike Coe with the chart master, Carter Braxton Worth of Worth Charting. If you're interested in better understanding the changes in methodologies in the calculation of the Consumer Price Index, I encourage you to go to the National Bureau of Economic Research at www.nber.org. If you're not inclined, I'll give you the highlights. If we calculated CPI the way we did before 1983, our headline inflation number would be much higher, or the inflation number Carter and Volcker confronted would be much lower. In any case, the important takeaway is that Fed action to stabilize prices is probably going to need to be much larger than many believe. So with that, let's just move right on to some viewer questions that we got after yesterday's video. So I think the first one we got here, can you guys go over Tesla? Thank you. Carter, what's our technical view on Tesla here?
Sure, let's get right to it. So we've got a handful of charts, and this is the first, and there are no annotations, right? No arrows, no trend lines, no moving averages. The very tight range-bound trading that you see, effectively between 750 and 600. If you were to take a look, you can call it a diamond formation. It doesn't matter what you call it. It represents equilibrium. Right? There's a standoff now. After dropping essentially 50%, is Tesla cheap? Some are thinking so, they're buying. After dropping 50%, some are thinking, gosh, this is just the beginning, and they're selling. We have a clear standoff. There's equilibrium. Now, quite often, a standoff, a moment of equilibrium, bears and bulls matched off, that has a shape like that, it's resolved in the direction of the primary move. Right, so we have a primary drop, we have the debate, and quite often you then have the second shoe to drop. So the next is the exact same time frame. It's the trend line. Not only have we broken trend, once we broke trend, we kicked back, we threw back, touched the underside of that blue trend line, and failed, and then have been in this. So let's combine those first two charts, and what we have is this clear standoff. You can feel it. There's tension after a drop to and below a trend line. And so how does it get resolved? More often than not, it is resolved with another bout of weakness, hence the down arrow that I've drawn. I would be reducing my exposure to Tesla, or if one is long and wants to put on a hedge, would be doing that through options.
So it's interesting because, of course, Tesla is always one of the busiest single stock options that trades. And in fact, we have seen some fairly bearish sentiment in the name. We saw some on the institutional side. We did see some fairly big put purchases today. And, as we just think about the fundamental picture in Tesla, right now the company's got about 75% market share in total EV. And, the fact is they are building a great product. I think that when we think about this company from a fundamental standpoint, we should think about how big will the market get. Ultimately, most cars are going to be electric, so I think that obviously is promising. What percentage market share are they going to get? I think that's going to be quite good too. The thing is that based on their valuation, we're essentially pricing the company right now to largely own the electric vehicle market. And I don't know that that's necessarily the case, because we have the maker of the best-selling car in the United States, truck really, the F-150 Ford, is going to be releasing the Ford F-150 Lightning. And, full-size pickups as a segment represent the largest segment within U.S. vehicle sales. Of course, globally, it's a slightly different picture. But, as we think about it this way, I think valuation here is a little bit stretched. And maybe the other companies represent a good pairs trade on the long side. Okay, so what's our next question here? We have another question from Batman. Throwing Apple into the hat if you guys can. Appreciate it. Carter, what are we looking at in Apple?
Yeah, I mean, look, in so many ways, it's not at any great inflection point. I've just brought one chart here. We know it's a big uptrend. You can see that anything that moves from the bottom left, the top right of the screen, definitionally is in an uptrend, and that is now no longer the case. Whether you call it a rollover or a topping out or a bullish to bearish reversal, that's the nomenclature I prefer. It has that look and feel. And we know that for the first time in several years, the moving average is now downward sloping, which defines this as no longer an uptrend. So the question is a little bit like Tesla, is this consolidation going to get resolved to the downside? It's not as clean and clear a pattern as that, and I haven't drawn any arrow. My hunch is this is more of a pair of twos. It's just sort of here, and it's anybody's guess.
Yeah, it's interesting. When we take a look at the options, this one too, like Tesla, one of the most actively traded single stock options. The tricky bit when we're trying to make a longer term forecast is that in this particular case, the lion's share of the volume that we see in the options in Apple is really short dated. I'm talking about, the top 10 options today, for example, all expire tomorrow. People are using these options essentially to day trade the stock. So that doesn't give us a great deal to look forward to as we think through earnings and other types of results. But I would make one quick point about it, and that is that on a valuation basis, especially on a trailing basis, not overwhelmingly expensive. And of course, the other nice thing is that they have increasingly been seeing more and more of their revenues come from the services side. That said, on the product side, they sell a premium product, and we have been seeing evidence in retail segments and from polling and from consumer confidence data that suggests that some of that spending might come in a bit. So to me, it would be really hard to be a buyer here. Okay, so let's take some more questions. And here we have a viewer who actually is asking us about two. So Carter, hopefully you can address them, and they're not necessarily related. But Jason Fraz is asking us about Wynn and Meta. They are close to the COVID pre-pandemic prices already. So I think he's hinting, maybe, he's wondering whether this is an interesting level to potentially exit since they're back to those pre-pandemic levels.
Yes, there is a hint to all that, or at least I would agree with your assessment of the tone, but we can't know. But let's look at the chart and what do we know? The first thing is it's a pretty unhappy circumstance. Yes, it's a downtrend, 140 to 50, a little bit of a ricochet of late. And remarkably, think of Wynn versus the overall equity market, both here and around the world, well above COVID lows. That's not the case with Wynn. The thing is, what's the premise to put money to work? There isn't any. And what's the premise to say, well, we should short it, that it's just dropped from 140 to 50? We'll press it here. That's risky too. It's kind of a pair of twos for a different reason. It's just not an actionable moment, at least to my eye.
Yeah, so in the case of Wynn, this was a company that had a handsome and growing dividend before the pandemic. They had to suspend that dividend. The company had been making investments in interactive gaming. They've gotten a little bit more conservative about that, and they've done some other things to essentially shore up their cash position. So there is an Encore in Boston. They did a sale leaseback deal. I think that brought in about $1.7 billion in cash. And of course, the real deal for all of these big gaming stocks is really what's going on in Asia, because that was the biggest portion of their revenues, the biggest portion of their growth. We often think of these companies as being based in Las Vegas, but really it was Macau and Asia that you needed to think about. And really what we need is a little bit more visibility on whether the pandemic pain is starting to ease at this stage. And I think we probably are going to start getting that as the earnings calls from all of these companies come out. And I think we probably will have a better opportunity to make a judgment about that one in the future. And how about Meta?
Yes, also fairly unhappy. But what at least we have here is we are very close to the COVID low. And also, we've had such an aggressive re-rating, that drop in gap in the first part of the year in earnings miss, surely. If one were to speculate, to be in the camp of so bad it's good, Meta is more appealing than Wynn by my work.
Yeah, Meta is an interesting one because this is a name that is trading low double digits. I mean, it's probably trading 12 times estimated EPS for full year next year. And all of the news has generally been negative. We obviously had Sheryl Sandberg exiting the company recently. And I know that there's a lot of concerns about whether or not gross margins are going to be able to be preserved going forward. But it's clear if you take a look at any analyst report on this thing right now, for the most part, they're citing all of these headwinds, all of these pressures, all of the negative news. And when you are only loading the boat on one side like that, it seems to me that there is an opportunity potentially for an upside surprise. And even if you don't get that, a lot of bad news is already baked in, which means that if there is further downside, maybe it's likely to be a little bit limited. We did see some bearish activity, but not enough to be meaningful there. I think that's all we have for you today. Thank you very much for watching. Please hit the like button, send us your comments, because as you can see, we're very happy to try to answer them, and hit the subscribe and notification buttons as well. Thanks for watching.